What's up, everybody? It's Chris, and we're back with another episode of Bullish Chips. It's Monday, June 30th. I hope everybody had a good weekend. As we know, here on Bullish Chips, we trade the ticker symbol SOXL and only SOXL. That's the Direxion Daily Triple Leverage Semiconductor Bull ETF. Looking at today's trade, we had an inside day, so didn't break the high of yesterday or Friday, and we didn't break the low of Friday. But there was some good intraday action. We can look here. I've got the very short-term trading chart up, which is the scalping and day trading chart. We're on the 15-minute time frame, and we can see. I've got some lines that I drew intraday, but technically we closed underneath a 15-minute downtrend line. Again, the light blue downtrend line is 15-minute. The lower broadening that formed is right here on the 15-minute perspective. Again, light blue is 15-minute broadening. We left if you remember from Friday's episode, we left the 1 hour downtrend line from Thursday intact because we had the break above it on Friday, but the retrace. So we went ahead and left that out there, and you can see we were still kind of playing around with that line. Again, we rely more on these horizontal levels, but these just kind of bolster the horizontal levels that we do have. So you can see that the 132, 150, and 161.8 fibs here. Again, we've got the I believe this is from Monday's gap up that we have here. This fib, let's see, let's bring it out. I'm not sure why yeah, there we go. Monday, June 23rd, gap and go. That's what that fib is from, or I should say that fib extension. So you can see we were playing around with those today. Didn't quite go up to hit this 200 fib, which also coincides with this 78.6 fib of the 2024 run-up, but we did get pretty close on Friday. I did wonder, because Friday was a 3, I was wondering if we were going to get a 2 up or a 2 down on the day chart. Again, you have to remember I do follow the strat combinations as far as a piece of my trading methodology. Again, you can go to the very first video I have on my channel, and you can find a link in the description to some resources for the strat. But a combo that I like to exploit is 3 2 up 2 down, or 3 2 down 2 up. So seeing that Friday was a 3, I was looking for today to be either a 2 up or 2 down. Again, to me it doesn't really matter. I'll trade either way, up or down. But we didn't get that today. We got a 1, so that's an inside day. And let's go ahead and make this a little bigger so you can see the day. This is today's portion of the chart. We did create a 1 hour downtrend line using Friday's high, and then really it should be going off of this high, the high from this morning as well. But technically we wicked off of that at the end of the day on that little squeeze at the end of the day. So we closed below a 15-minute downtrend line. We closed below a 1 hour downtrend line, and we have another 1 hour downtrend line that is from earlier this morning as well that we're closed below. These downtrend lines coincide with, again, this 161.8 fib from Monday's gap and go, and also this I don't know if you can see this yellow dash line, 25.28, 50%. You see there, that's 50% of last quarter. So we in first quarter we kind of pushed down. Second quarter we pushed down really far, we went outside of the first quarter's low in the downward direction. So although we did have a good run up, we did only make it back up to 50% of what the first quarter was. Go ahead and record Let's just go out to give a better look here. And we can see that here's that yellow dashed line, that 50%, at 25.28. That is 50% of this candle. That's this again. We're on the quarter chart. This candle is from the first quarter of 2025. 50% of that is 25.28, and you can see we went down. We went down all the way down to this 200 a day moving average on the quarter chart, and wicked off of it, and we had a real good pushback up, and it's pretty logical that we would stop back at the 50% of the first quarter. So again, that coincides with some of the short-term indicators that we have, the fib extensions. The fib extensions that we got from Monday's gap and go. This is also the 300 fib of the mid-May to early June range. So if you remember back to that, let's go. Oops, I didn't do that 4 hour. Let's go to the 4 hour. Let's go with the swing. So we can see early May or late May to early June, we had this range here, and we popped above it at the beginning of June, came back, made that support. All right. Let's go. This is the range that we were in from mid-May to early June. So that's what we took the fib of there. If we go back to 15 minute, you can see, again, it may look like a bunch of mess, but there is method behind the madness. You can see this was the start of May, early May is right here, and if we go to the beginning of June, we poked below it a couple times, found support, and then this was our ceiling. Once we popped above that, that's what these fibs are from, and you can see we've made it all the way back up all the way up to this 300 fib. So we've tripled this range right here. We've taken this range and we've tripled it, well, doubled it, but there's 3 equal ranges right here. So again, it's another reason to look for a possible slowdown in this area. If you go back to my video from last night, I talked about how it's a short trading week. A lot of times short trading weeks can either go sideways, a lot of times they're actually red. We've got a lot of economic information being released this week. Jerome Powell speaks tomorrow when the market opens. So there's a lot of macro, geopolitical, a lot of things line up, not just with the charts, but outside of charts, to give us reason to understand why we may slow down here. But let's go back in on the 15 minutes so this chart doesn't look so jumbled, and we can see that we also formed a lower part of a broadening formation on this 15 minute. So although we did go and wick up here at the end of the day and kind of reject, we've got this inverted hammer, and then if we look up here, we're slightly lower in the after hours. It is 6:30 Central Time on this chart, or right now where we're looking at this chart. So there hasn't been a whole lot of after hours, but we are slightly down, but not down enough to think that we may gap down tomorrow or really push down tomorrow. There's still a possibility to continue to go up, create a broadening formation on this 15 minute, which could go up, somewhere up to like the previous high of last week. If we did that, let's get the right tool here. Maybe it's a little ambitious, but say we go to the previous high last week tomorrow sometime, early morning or something like that. I'll change this to blue so we would know that this would be 15 minute, but you could see how this would be a 15 minute broadening here, especially if it breaks through all this resistance here, I could definitely see it going and testing Friday's high, which was also the high of last week, which is just slightly underneath, again, the 78.6 of the 2024 run up, as well as the 200 fib extension of Monday's gap and go. So, sucker some people in with the inside day, give you a inside or a shooter or an inverted hammer at the end of the day. You might make a lot of people think that they need to go short tomorrow, and you get surprise them with pushing it to the upside. Let's remove this because it hasn't actually happened. I guess I'm getting a little ahead of myself. I'll get on this back when we're looking at the one day, but today was an inside day, so this my second favorite combination to play after the 3-2 is the 1-2-2. So again, probably not going to take huge action tomorrow if we go 2 down on the day, meaning we breach the low of today in tomorrow's trading action. I may take a short intraday, but don't know that I would swing anything overnight from a short perspective, because the next day could be a 2 up, and we're in a 2 down 2 up reversal there, and going back to the upside. Again, we've got full time frame continuity for the most part to the upside, a lot of momentum going to the upside, and unless these economic numbers that are reported throughout the week this week are terribly bad, I don't see any reason why we wouldn't continue to push up. Now, again, that's not a prediction of what we're going to do. It's just where probability may lie, and again, we can play the charts whether we're going up or down. So again, I'm a little ahead of myself talking about the day. We're still here on the 15-minute chart, but I think we can all see what's going on the 15-minute chart. It is technically in a downtrend. It could continue, instead of going up and creating the broadening formation up here tomorrow, it could just continue to follow the bottom of this broadening formation down, maybe to Friday's low day, something like that. So let's go ahead and move on to the 1 hour chart. For that, we'll swing over here so we've got less jumble, but it is good to kind of look at it in both ways. Yeah, we can see good movement. We don't really need it on there. So we can see that we are technically in a downtrend. We're under a downtrend line. We haven't even created a lower broadening to the downside. So this 3, we never got below it here. So although we did make a lower high on the 1 hour, we made a higher low. So when that's happening, we've got consolidation. Technically, that 1 hour downtrend line from Thursday of last week isn't truly broken. We're kind of riding it, and in doing that, have created another downtrend line, 1 hour downtrend line above it from today. So we got to kind of watch it. Again, stay kind of light, stay nimble, so that you're not too heavy in, because this thing can quote unquote reverse, because it hasn't actually really chose a direction. And the inside day is just that. It has not made a choice of which way it wants to go. So from the 1 hour perspective, we're looking okay. Technically, we could draw a little uptrend line right there. Oops. That's the 1 hour, the kind of more dull blue. So we've got a little triangle that's forming here. Maybe it will take it till the end of the tomorrow to break to the upside or downside. We don't know, but we can see where the structure is right at this moment, and just get ready to go either way. Let's go ahead and pop on out to the 4 hour chart. And okay, so a 2-2 reversal is usually pretty strong, and that's what we got initially. So Friday we had a two down in the second 4 hour candle. This morning we had a two up. We opened up two up for the two down, two up reversal, but it never reached magnitude. We got the lower, well, we didn't get a lower high yet because this has not been breached to the downside, so this could be a lower high. We could end up pushing back up tomorrow and creating a high that's higher than this. So right now we're not calling this a high yet. This is a higher low right here on the 4 hour chart from Friday. So from a 4 hour perspective, technically we're still in an uptrend, and you can see that. Let me widen this out so that things look a little bit better. But you can see this dashed gray line right here. Oops. This dashed gray line right here is going off of this low and this low. Yes, we close below that. Again, we don't take trend lines too seriously, but we do like to see them converge with horizontal lines that we do have. So it looks like we could be being rejected by this 50% of the first quarter. We were close slightly below this uptrend line, 4 hour uptrend line, but again, we haven't totally broken down. This hasn't been set as a lower high yet. We want to just continue to watch it. So from the day perspective, let's get a cleaner chart here. From the day perspective, we can see Friday was that big red three, and then today is the inside day. Now, one thing we can say from structure is although it is red, it is a hammer. So sellers tried to push it down, but it was bought back up. Not enough to flip it green, but it was bought back up. So that's something to keep in mind as well. But again, there's nothing to indicate where we're going to go today. Tomorrow. But we can look for the 312 down strat to go to magnitude here. If we do get that, I'm looking for, because this is also the 200-day moving average right here, I'm also looking for a possible poke through, bounce off of this, which is the low of 2024, and possibly push back up for a hammer, which would still set up the 1-2 down, 2 up for not tomorrow, but for Wednesday. Again, that's the bullish view of it. We could always just go 3-1-2 down and just continue to go 2 down because we've got thin structure here, we've got a gap here, we've got an old downtrend line on the day chart there. We've got room to go down. The last week's low coincides with this 138.2 fib, which is an extension of the September 2024 to December 2024 range. If you remember, we went sideways. It was kind of a large range, but we basically went sideways for 4 months at the end of 2024. Go ahead and let's bring it to the day chart. And we can see, maybe we do need the next day. We can see 2024. We were just in that range. So we're just now coming back up into that range right here. We've been below it this whole time. This is major resistance at this point. But if we do poke through, and if we manage to poke through this monthly downtrend line right here, if we do that, this green dash line is a monthly downtrend line. If we break through that, then we look at flipping the year back green. This is the year flip. If we get above 2813, the year is back green, and we look at possibly pushing, going to that would also make a higher high from this perspective. I believe on the week, let's go to this. No, on the week it wouldn't be a higher high. We would need to breach that 36 area to make a higher high on the week, but it would make a higher high on the day, that 30-55 area. And if that were to happen, you know, that makes a we're definitely making a higher high on the day. This would be the next high on the day that we're trying to breach. We cleared this one here. Now we're trying to get to this one and possibly this one. So the path, the bullish path is there. It's got some resistance, but it is there. Let's go ahead and just get into our setting up the chart for tomorrow. And if you remember, today was the last day of the month, which is the last day of the quarter as well. So we want to make sure to change our levels. So this price level 1 is where the price opened today. So what is this, 7-3, the week of 7-3. This is how I tell myself where the opening print for the week was. I make it this red color and give it this week W for week dash, and then the week, and that, so I know that's where it opened. I know if we're below that, the week is red. If we're above that, the week is green. We basically already had our downtrend line set. I guess we could, there's no real point in adding the one from here to here. We've already broke it. Well, I guess we'll go ahead and add it because we closed right back at it. Let's just mark this up real quick. And if we're going to do that, then we've got to do this to make the uptrend line. Which again, we don't trade off of the trend lines. We don't enter, exit. We don't base our hypothesis on any trend lines. They're just there to bolster our view of the horizontal lines. So the reason why it may look so messy when you get to the bigger time frames, it makes a lot more sense when you get in here. And yes, we may enter on a 15-minute trigger or a 1-hour trigger or a 4-hour trigger, but if you want to get your entry, if you're really trying to get spot on with your entry, or at least from my perspective, then you can go get down into the 5-minute. A lot of times, you can get a trigger on a 15-minute that will then pull back past your trigger, which number one could cause you to stop out if you're setting a real tight stop, but it just has something else to play out on the 5-minute chart than it does when you're looking at the 15-minute chart, and that pullback may just be going to set a higher low on the 5-minute time frame, which gives you more confidence that the move upward may happen. So if you watch the 5-minute, you can see when you get that higher low, and when that higher low gets locked in, you can enter your trade there instead of the 15-minute trigger, which could save you some money as far as the amount you have to spend on the premium. You can get a better entry a lot of times if you're looking at it from that perspective. It can also give you a better stop if you're really trying to keep things tight. I don't usually like to put a stop on a 5-minute just because the noise that you can see on the chart in a 5-minute, but I definitely like to enter on a 5-minute, especially if everything else is lined up from the 15-minute to the 1-hour to the 4-hour, or even just the 15-minute to the 1-hour if I'm trying to scalp. But if we've got full time frame continuity going to the upside, then I'm perfectly fine on getting in on the 5-minute and then setting my stop on what the 15-minute exit would be, because I'm usually getting a better entry on the 5-minute. So again, this is just how I do things. If you don't like it, I don't blame you. Feel free to drop from watching this video and go watch something that is better suited for you. But when you're in here trying to get a real good entry, all of these lines can make a difference when you're trying to scalp, which if you have a 9 to 5, a job that you're not able to just be looking at the charts all day. Sometimes all you can do is a scalp, or sometimes to just keep you from entering in too big of a trade, you can enter a scalp and just kind of test your trade methodology if you're trying to establish a trade methodology. Or if you're just really confident in scalping, you can load up on contracts and get something really quick and be done for the day. So this is just my view of things. We'll go back out to this 1 hour. 1 hour is going to get a little bit more difficult to read, but once you get used to this, it's really not bad. We can see we don't really need to move anything on the 1 hour. The 1 hour is pretty much all set in stone. We can put a 1 hour uptrend line there. Again, just to give us a point of reference when they're in there on the smaller time frames, trying to enter on either a scalp or just get a really good entry on a day trade. The 4 hour, we'll go ahead and mark up the 4 hour as well. Let's see here. We can't really do anything on the 4 hour because although looks like it's a higher low, this is still a 1. So we're not going to be able to say that's a higher low just yet. So if we look on this chart, we can see we've got the uptrend line still somewhat intact, but this is a 1, so it hasn't breached this candle yet to lock in a lower high. So we'll just go in here on the 1 hour, straighten this up for this. And again, we're only looking at this when we're scalping, at most day trading. If I'm doing something else, I'm not looking on this small of a time frame and having to look through all of these lines. But let's see, did we not have? Oh, this isn't the most recent. Oops. This should be here. There we go. So I think that's all we can do on those charts. We've got the swing. We got the 4 hour, 15-minute. Okay. So now what we're going to need to do is set our high, low, and 50% marks for last quarter and for last month, because we're going into a new quarter and into a new month. So this gets kind of ugly on our real short term trading chart, but if you get in here, if you know where the quarter starts and ends, or the first quarter started and end, and this quarter starts and ends, you can find it pretty quick. So as we go in here, let's just move these. And again, all this marks is the low, which is this 0% line, which is the small dashes. The bigger dashes here is 50%. And this solid line, which you can't really see at this point, you see the solid yellow line, that's the high. So that's how I know if I'm in on a smaller time frame chart. If I see the yellow dashed line, I know, hey, that's last quarter's 50%. That's a frame of reference for me. Again, it's not something that you necessarily need to do, but it helps me out. So if you'll allow me, I will move these real quickly on my charts, and we can move on. And again, if you're not familiar with my charts and how I set them up, why I do certain things, I try and give a good explanation in these nightly videos, but I do have a video that is specifically about how I set up my chart, where the basis is at for my charting, and actually I don't think I posted that, but I'll post that tonight after this video. So we get back in here. So now we're doing the month. So now we just need to look at last month's low. Attach that to this month's low, or June's low. Whatever we're calling this month, if it's last month or this month. I guess if we're looking at it from this perspective of tomorrow, this is last month. So let's get these moved here. It seems like a lot of work, but once you're used to doing this, and after you've done it a few times, it goes by pretty quickly. And then they've been moved. These are only monthly and quarterly things that need to take place. So once they're there, they're there. You don't need to worry about moving them again until the next month at the earliest. And when you're moving the month, it's usually only the month. You only have to move the quarter and the month 4 times a year. So yeah, we've already got all those moved. We've got our fibs marked. Let's go in here and change our high a day, low a day, and 4-hour markers. Right. Where is our down? So this is our 4-hour down trigger. So that would trigger the 2-1-2 down. And here's previous low a day, which would be the magnitude if we went 2-1-2 down. So not far to go if we go 2 down. Got a little ways to go if we go 2 up from a 4-hour perspective. Let's go ahead and get this one as well. And again, I only do this on the for the time frames where I'm day trading or scalping off of. It'd make I guess it would make a little bit of sense for short-term swings, but if I'm swinging something for multiple months, this isn't quite as important. So I only have the 2 charts that I need to do this for, and then that's the down. Once I've done that, I'm done. Thanks for hanging with me, and that is done already. So let's go in here. You know what? I forgot to show you how well today played off of opening print, overnight high, and overnight low and previous low a day. We didn't do previous low a day, but overnight low. I'll have to remember to do that tomorrow, especially if it does it as textbook as it did today. Actually, you know what? I'm just going to do it right now. Let's go to the 15-minute. Let's move these back. Previous high a day. Activate up. This is the 4-hour up trigger. This is the 4-hour down trigger, which also happens to be the previous low a day. Alright, so let's go in here to the 5-minute, and we can see how beautifully this played, not only off of those levels, but off of some of the fibs that we have here. So you can see, to start out the day, we opened up. We didn't gap up because the previous high day is up here, but we opened up and it immediately pushed down. So we were under the opening print, and we were looking for some type of lower high underneath this opening print to signal that we were going to go down further. Didn't get it on the 5 minute. Let's go to the 1 minute. I don't usually like to trade right out the gate. No, yeah, so we didn't even get the lower high. It just went straight to, oh, look at that. That was the overnight low. After it went to the overnight low, it of course is going to go through that for it to take out any stops that anyone has set at the overnight low and come back and test. On the 1 minute, you can see how much movement there actually is and how much it played with that overnight low. But if we go to the 5 minute, it's a little bit more controlled than the 1 minute. But you can see it's just resting on this overnight low. Now, what we can also see is initially it makes a lower high. Okay, we take note of that. And if it would have closed below over the overnight low, it might have been time to load up for puts again. And technically you could have if you were playing a 1 minute chart, but I don't trade off of a 1 minute chart, so I didn't do that. And you can see that the 1, 2 up, 2 down was triggered with the magnitude, which would have been here. But if it was going to go bullish after flushing a bunch of overnight traders out, then it would create a lower high. So that's another reason to wait and not get in on a 1 minute trigger. So you can see it did make a higher low. It went up. It did make another lower high, but it made a higher low again. So it was consolidating. Then it popped up and made a higher high. Came back down and made a lower high, or a higher low. So now we're thinking, okay, we're in uptrend territory. But it did go back up and make a lower high off of this, what is this again? This is the mid-May to early June range. So this is the 300 fib. Also, this 1 hour downtrend line from Thursday, right? That's where we're at right here. And it goes back below. But the whole time it's still playing with the overnight low. So we did make a lower low. And that could have been a trigger again to go short. But we know that the first target when we're below the overnight low was or once we're below the opening print was the overnight low, and it needs to resolve that before we actually go into anything. So not just resolve it on the 5 minute, at the very least a 15 minute, right? Those are the trades I take, 15 minute and 1 hour, but I will enter on the 5 minute. So you can see at that time on the 15 minute, it was in the process of making a higher low. So no point in going short when we already have more long-term momentum, full time frame continuity, the month and the quarter are green. There's no, unless you just want a quick short, there's no point in getting in there down here on this shorter time frame. But we're on this shorter time frame just to illustrate how well these levels play out. So we can see it tried to poke again below the overnight low. It couldn't, and after it made that a higher low, after it made that last attempt at going through the overnight low, it made a higher low right above the overnight low, and it took off. Okay, so we can see on the 15-minute, what time is this? This is 10:20. Yeah, I think that's about what time. I would have to go look at my trade, but I believe that's around what time I entered. So where's 10:20? 10:15. Yeah, so once we got the higher low, I believe I entered when we triggered on the 2 up and went above this 300. So I was a little bit early, but I went ahead and got in because I knew I could have a tight stop right here. My stop was a little bit below this. I think I set it right on this 24.79, but that way if it did break for a lower low, then I knew we were probably creating a broadening formation, and I didn't want to sit through any more chop or any more drop. I just would rather have just taken a very small loss and got out. But it ended up working out, shooting back up here to the 4 hour up trigger and rejecting slightly below opening print, at that point, I'm thinking, okay, if we're rejecting an opening print, we're still bullish, short term, and let me go ahead and set my stop. At this point, because we were all the way up here, and the stop would have had to been here if I wanted to be below the higher low. I went ahead and went to the 5 minute. We made this higher low here. I stuck my stop. I believe it. Yeah, it was the 161.8 fib. So I got this move minus this little pullback because it once it got around here, it triggered and it sold, but got a little bit of profit. I did enter a put at that time, just as a scalp because we got the lower high on the 5 minute and it broke the lower low. So basically, when my stop loss triggered on my calls, I went ahead and entered the put. I was green, but I ended up getting stopped out because again we had this magnitude. It was just a little scalp. I was just really trying to see if this was going to be turned into support, which was previously resistance. Once we got to around here, we made the lower high. I went ahead and stuck my stop here when I think I did it a little early because I thought this went too down. Maybe I stuck it here. It was after we made a higher low that I went ahead and set my stop because otherwise it would have had to be all the way up here. We went ahead and stopped out. I think I put it up here a little bit just because I didn't want to play around in case it did a little poke. But I think the spread ended up getting me at that time, and although it didn't come all the way up here to or what I had calculated to be up here, it went ahead. The spread I think got me and sold when it went here. It did end up going back down, so I did not get any of this action on the put. I broke even. I think it was a little, but like I got a couple dollars. It wasn't much. I just wanted to make sure that if we did flush, I was at least had dipped my toe in there and had a little skin in the game to get some to the downside. So I wasn't mad that I didn't really lose money on the contract. I was a little mad that I missed out on the downside, but again, I didn't want to be anything to the downside too long just because of overall momentum that we've had. We didn't have any catalyst to the downside yet today. Yes, it is a short week, and we have a lot of economic information being released tomorrow, or I mean this week, but it wasn't enough for me to say I want to stay in a put for a long time. So I ended up making a little bit of money on this call, nothing on this put, and I just stayed out of it. At the end of the day, I figured there would probably be a squeeze, but we had enough resistance in this area that, with it being an inside day, I didn't want to try and push it. Better wait for tomorrow when this inside day gets breached, either to the upside or the downside, because that gives us a little bit more to work with. It gives us a target. If we breach today's high a day, the target is yesterday's high a day. If we breach today's low a day, the target is yesterday's low a day, or Friday's low a day. I apologize. But yeah, again, just kind of more of a day of watching, taking in what was going on, thinking about what's coming up, and positioning yourself for that. I didn't do anything with any of my swings or September, November expirations. Yeah, it was a pretty quiet day today. So what I'm looking for is tomorrow the resolution of the 4 hour and day candles. If we go here to the 4 hour, are we gonna get the two down? And if we get the two down, the magnitude is so low, are we going to get a failed two down where we go two down and start pushing back up? And if we do that, then is the second half of tomorrow going to be bullish for a 1, 2 down, 2 up reversal, target being today's high day? Or, well, yeah, tomorrow will be yesterday's high day. But, that's what we're waiting for on the 4 hour and on the day. Let's just make this big. Oops. Let's just make this bigger. And on the day, do we go 1, 2 down, which has a magnitude of the bottom of the three? So, we're looking at from here to here as being the target. If we do break further, do we get into this thin structure? Do we get support from last year's low? Do we fall through last year's low because of this thin structure? And then do we get sucked in by this gap? Gaps tend to be magnets. Gaps like to be filled. So, there's plenty of room to go to the downside. The upside would be a 2 up, magnitude being here. Do we get super bullish off something Powell says tomorrow or some economic numbers that we get and just push up into, this monthly downtrend line, or possibly break through it and try and flip the month back green? If we do go 2 down tomorrow, what does Wednesday hold? Maybe we get good economic numbers on Wednesday and we get the 1, 2 down, 2 up, with the magnitude being the high of the 3. Again, we're sitting in the middle right now. And the key to this game is patience and making high percentage trades, right, with good probability. So, again, I was real light on my trading today. Tomorrow, I'll maybe be a little bit heavier, but probably still remain somewhat light because I want to see what happens with the 4-hour and the day chart. So, that's really what I'm looking at. Again, these videos are, I don't have any production, or I don't do any editing at all. I just record it and put it on YouTube. So if you have any pointers, constructive criticism for me, let me know. If you like anything that I'm doing, let me know. If there's anything I haven't explained well enough, let me know. It's in regards to my charts and things of that nature. So I'm looking for any type of feedback from anyone. Just want to build a small community of SOXL traders, and where we can exchange ideas and really build on one another's successes and learn from mistakes. So this has been another episode of Bullish Chips. Again, my name is Chris. Do all the YouTube stuff if you can. Like, comment, subscribe if you'd like, and tune in for another episode. I'll try and make these episodes every night, but if I don't, then I'm sorry. But I'll try and keep them up to date as possible. Oh, I guess one thing we didn't go through was how things are looking from a month perspective since we're going into a new month. I really like it. We're showing good push. We are running into a little bit of resistance. You can see over here historically from a monthly perspective. This is kind of an inflection point, this zone right here, but we've got this big 3, and usually what happens is if you breach one side of the 3, you go down or up until you are finished going down and up, and once price action comes back into the 3, its objective is to go breach the other side of the 3. So we're looking at 36 area. I'm not going to say when we're going to get there, but that would be what I would expect we get to. And so I'm just really watching that. The quarter is very strong quarter. Basically a hammer, but with not a huge body, but a very big body. And it could end up turning into a 1 combo 2 down, 2 up situation, which then turns into a 3 combo 2 down, 2 up situation, which would then put our target up here at 70.08. So we've got a couple gaps up here to fill as well. If things really start rocking this summer, we could have a very good summer. No way am I saying that we get up to 70, but we should start getting up here mid 30s to 40s possibly, and really retest last year's 50%, which is about 46, 47, and which also lines up with the 38.2 fib of the 2020 low to all-time high as well as the 38.2 fib of the 2024 run up. So look for the 40 to 50 area to be a big resistance from a longer term perspective. Again, we've got a long ways to go before we get there, but we're moving and we're grooving. So thanks everybody for joining. Like, comment, subscribe. Have a good rest of your night, and have a good trading day tomorrow.